Okay, very good morning. It is Monday the 26th of February, so hope everyone is well and had a good weekend. Just going into what we're going to cover here, there's some focus on US yields once again and the upcoming first big speech that we're going to get from the new Fed chairman, Jerome Powell. So we'll have a look at that and what potentially could be said. We're also going to have a look at Brexit. Quite a few headlines from over the weekend, and this comes ahead of the opposition party Safe's favourite Jeremy Corbyn. It's going to be taking the main stage and is going to make a bit of a U-turn on the customs union in terms of the Labour stance. So we'll look at the ramifications of that. Oil's seen a bit of movement this morning. A couple of headlines out of Saudi Arabia at the weekend, and then I'll hand you over to Sam, who can talk you through some of the charts and things we're looking out for the week ahead. So looking at the markets this morning, as you can see, I've got the currency pairs in the top left, gold top right, equity markets in the centre, DAX on the left, S&P on the right, and then the T-note in the bottom right hand corner, and crude here. So what we'll be seeing this morning, well, equities on the front foot. There hasn't been a great deal, I'd say, of certainly any equity specific news that has come out. A few people just talking about the general news flow overall, relatively light, nothing really too much developing overnight in Asia. Wall Street finished with a little bit of a late squeeze higher on Friday, and we continue to remain on the front foot at the moment. The S&P just short of the R1. As you can see, the DAX above that level at the moment. So it's pretty decent gains already, just out the traps this morning. One thing that we have seen though is a bit of dollar weakness. I guess this is the reversion back to the general pattern that we had been seeing, which is, despite a lot of talk about firmer yields, it's one about lower dollar. So very much a disconnect now between those two things. Obviously a lot of people looking at the debt and fiscal situation of the US, obviously, which is deteriorating at this point given the influx of supply. Certainly a main feature of what we had last week as the US tries to finance things like these pretty far-reaching spending plans from the Trump administration. So dollar weakness still, it has found a bit of a floor more recently, but both major pairs then are elevated, and if anything it's a little bit more pronounced in cable, which is up about 66 pips. So I'll leave the kind of technical assessment to where we might go from here to Sam, but as you can see, we've already managed to get above some of the range trade highs that we were looking at towards the back end of last week. With the dollar weakness, gold elevated already. That also consequently has moved above the high print that was seen again towards the latter part of last week. And we've managed to find a bit of a floor as well after that initial break of the level before the next extension was seen, really, as early birds in Europe came into the market. So let's have a look at some of the news stories, just to wrap up the main things to be aware of. And the first things first is looking at the US 10-year yield. And this is to kind of set the scene for what one of the big banks are saying, and then the run-up into Jerome Powell's speech we'll get on Tuesday. So 3%, this is the big line in the sand that people are looking at. And as you can see, we were surging in yields very much so after this particular point here, when that wage data came out, the first Friday of the month in non-farm payrolls report, and then that shot higher than expected, and that triggered then sparked this fear about impending rise of inflation. And inflation expectations shot higher, and consequently the yield moved up. However, we did fall short of really a firm test of the 3% level, and we have backed off that at the moment. So this is going to be really key going forward to determine whether or not we continue to see weight in the fixed income markets. What has been relevant for this morning on this topic is that Goldman Sachs have been out. If you remember, at the end of last week, Goldman's were talking about they think that the Fed are going to deliver as their baseline scenario 4 interest rate hikes. Don't forget, the Fed are only communicating they're going to do 3, and Goldman's thinks they're going to do possibly 5 is a viable option for them. Now, supplementing this view then, obviously this would mean that the yield would be moving higher, And Goldman's have put out a call over the weekend that they think the US 10-year yield's going to hit 4.5% by year end. I would say this is the most aggressive calls that you're probably going to see on the street. Certainly it fits with their view from the number of rate hikes that they had. They reckon that if that was to be the case, then you're looking at a 25% decrease in US equity markets. Just to give you a bit of a flavour, what does 25% look like in the S&P? Well, that's 25% there. So, I mean, this is going off the peak. If we were going even lower, so let's remove that and put it from the current day's price. If we were going to go from today's price level, then you're looking at a fall down to about that kind of level. And obviously you'll remember, what was that big wick on that volatility on that day, the fateful day of the 8th of November of 2016? Of course, that was when Donald Trump became US president. So they're looking at a wipeout of price movement all the way back down to those levels, eradicating the rally that's been initiated ever since Trump won the US election. Don't forget, when you get these banks making these calls, obviously, you know, there's things, lots of moving parts behind the scenes of reasoning why they might want to be positioning themselves, or at least communicating a view of that far stretching. But I wouldn't read too much into this. I would go with the collective of what Wall Street is saying, and I'd say, as I said, this sits way at the more punchy end of the scale, but certainly does make the headlines. So if they were looking for a lot of press coverage, then they certainly got that this morning. This does lead us into this chap. Of course, this is Jay Powell. So Janet Yellen obviously has gone now, and this is going to be the first real insight and the first keynote speech that we're going to hear from the new Fed chair. So how this happens is that he will appear to both chambers of Congress. I think it's the House first, and then it will be the Senate second. The House one's always the most important, whichever speech comes first, because he basically repeats it to the other chamber then the day or two after. And the key here is to think, or to get an assessment, is this minor correction that we had in the market at the beginning of the month, this kind of renewed fear of inflation, which has, don't forget, been supplemented by an increase in wages and a slight uptick in US inflation, albeit not as high as some may have feared, but certainly is moving higher. Has this had any meaningful impact as towards the Federal Reserve's view and outlook for US policy going forward? So this is what's key. The neutral rate. What is the neutral rate? Is going to be the thing that people are going to be looking at. So we're going to talk a lot more about Powell tomorrow when the speech is going to be looming. It will come in London time later in the afternoon. I think it's on Tuesday. And then we'll sort of talk about scenarios and how to trade that event. Otherwise, moving to our own shores, this is something which is going to be coming out as well a bit later on today. So Labour leader is to outline Brexit policy in a key speech on Monday. So this is a big week for Brexit, because Corbyn delivers his today, and then Theresa May is going to be giving her Brexit key speech on Friday. So a couple of things to be aware of here. Obviously the headlines are that Jeremy Corbyn's speech on Monday is going to outline UK Labour Party's Brexit policy, and what we're looking at is the customs union is the main point here, and Labour putting their might behind the fact that it's important that we stay within that, which is the opposite then stance of what the Conservatives are saying. And just given the fragile nature of the leadership of Theresa May, it could potentially set up May with a devastating defeat in the Commons by teaming up with disillusioned pro-Remain Tory rebels jumping in bed with the Labour Party officials, which of course could be highly destabilising. Could it cause a crisis for Theresa May? Well, as I say, she's in a bit of a rock and a hard place at the moment, because if she sticks to the line of complete removal of the single market and customs union, she's going to distance the pro-Remain Tory rebels, which then may side with Labour. But if she does soften the stance, then obviously she's going to it's going to come up against resistance from the Brexiteers of the Conservative Party. So May has ruled out any form of customs union with the EU after Brexit. But if she abandons that stance, she risks alienating another faction within her party, with the hardcore Brexiteers like Jacob Rees-Mogg, the bookmakers' favourite to succeed her. So quite a few things to have a look at. What I'd say really this means for the pound is that you're probably going to start to see an uptick in or an increased range of price movement for the pound, i.e. its sensitivity to things like leaks, rumours, reports that are coming out, changes of comments. So volatility is likely to pick up a little bit of pace. Key speeches coming ahead, of course, of that March 22nd, 23rd EU summit, which is going to be key for securing the transitional deal. The other problem that we've got to tackle, of course, and something to listen out for in these speeches that are upcoming, is this issue of Northern Ireland. So the EU have come out, this is the front page of the FT this morning, and the political truce over Northern Ireland's post-Brexit status threatens to be shattered this week as EU publishes a draft withdrawal agreement that leaves out crucial compromise language secured by Prime Minister Theresa May. So this is going to come on Wednesday. So you've kind of got a sequence of events here. Corbyn today, the EU releasing their legal text of Britain's exit treaty on Wednesday, then you've got Theresa May on Friday. So there's plenty for you to get your teeth into from a political point of view. Elsewhere in the commodity markets, oil's backed off a little bit as Europe stepped into the market. It did see a decent rally actually when electronic trade reopened last night. Prices did move briefly towards 64 in the Asia Pac session. This is back towards a 3-week high. There's been a couple of comments out of Saudi Arabia over the weekend who essentially have said they would continue to curb exports in line with OPEC-led effort to cut global supplies. A few other things here to be aware of if you are someone who looks at the crude markets. So the general gist of what Saudi Arabia is saying is about the extension of the ongoing cuts that have been in place to continue to keep prices elevated. Elsewhere though, do be aware, obviously we're tracking US North American output, which of course has taken over that of Saudi Arabia in recent weeks and has continued to remain at its highest levels in a long period of time. US energy companies, in fact, last week added one more oil rig. So remember the Baker Hughes rig count number that comes out every Friday evening. Last Friday, that was up 1 again, which is the 5th weekly increase in a row. That means the total amount of rig count in North America is now at just shy of 800, which is the highest level since 2015, April of that year. On the other side of things, in terms of speculative positions in the market, hedge funds and money managers have upped their bullish wagers now on crude oil for the first time in 4 weeks. So irrespective of this US story that's been developing and this ongoing movement higher in productivity as more rigs come back online, markets actually still favour being on the view that on balance prices are going to be supported at this point. Okay, quick look at the day ahead and the week ahead. Today things are, from an economic data point of view, relatively quiet. You've got some housing data coming out, but this carries really little significance because the R is reflective of the fact that these are just revisions to previous data dating back to last month. Looking further on into the afternoon, new home sales. We have had a little bit of softening in the US housing market in the last month's reading. But overall, let's not forget though, the context, the US housing market still remains fairly elevated in terms of robust performance in the context of the statistical data of the last 10 years or so post the subprime crisis. Speakers though, we do have quite a few, so just be aware. You've got ECB's Kerr speaking at 10 AM, Fed's Bullard, although a non-voter, does tend to be a fairly opinionated chap and is speaking on the economy and monetary policy. That'll be at 1 o'clock. You've then got ECB's Draghi speaking at EU Parliament. So this is kind of a rerun of what we had of the Bank of England's Monetary Policy Committee members in their Treasury Select Committee meeting last week. They don't really say too much, but of course, when the governor, or in this case the president, is speaking, I would definitely keep half an ear tuned into that event. And there's a few other speakers happening later on into the evening as well. For the week ahead, this is how the lay of the land. You've got this actual testimony from Powell is actually bumped to Tuesday, so just ignore that. It's not Wednesday, it's Tuesday. Other things to be aware of here. Data, you've got some PCE numbers, obviously with the inflation focus in the US, that'll be worth watching in the afternoon. The regular crude oil data on API on Tuesday, DOE on Wednesday. I'll check with Philippe here. You've got the PCE on the Thursday and the Wednesday. This is probably maybe final revisions to a quarterly reading. These are probably monthly, I assume. And then on the Friday, you've got some Canadian figures, US, Michigan consumer confidence. So nothing really too substantial, but one thing that you will note is there are a number of key speeches coming out from a variety of different central banks. US in particular will be in focus, I would say. And then Theresa May's speech on Friday, and then of course something which we'll talk about towards the end of the week. The Italian election is this weekend. I'll send some research out for that to your inboxes a bit later on this morning when I send out our weekly strategy report. All right, going to hand you over to Sam. He can look at the charts and what he's looking at for the day ahead. Have a good day.
Yes, good morning. Hope you all had a good weekend. A lot better than mine anyway, of Arsenal losing, England losing. And I told my football team we were playing at 1 PM. And then 10:30 I got a call asking where we were. So we lost that and we're out of the cup. Anyway, moving on hopefully to better things and better weeks ahead. Looking at the pound here, just pushing on to near the high of the day. And as mentioned, just in case we were to continue to push on, levels to be aware of. Back here on the 15th or the 18th, so I've got in mind around 140.63 would offer some sort of resistance. You can see the last time we were around here, the sellers really did take over. I think probably worth as well using the previous highs. Let me just make this a bit smaller around here, just to see if we have got any trend lines to be aware of. You can see didn't quite hit the one on the 16th, but definitely one to bear in mind if we were to continue to push to the upside. Dollar index down a bit, and that's noticeable across the other pairs here. Euro dollar still nicely above where it started the day, and we're just, well, we can see here what was the previous high, which was also the sort of the resistance points we saw on Friday, offering support initially. Ooh. But now I would say this area is probably one to leave alone. Become quite choppy, very range bound. So for me, I think for the euro, better to sort of see us break out either here to the downside or above to the upside. And if we were to see that continued dollar weakness, where could we go to? Obviously the key sort of breakout area being Thursday's high, but quite a few points of interest before that where we had turned around. So perhaps a bit clearer in the pound for a move to the upside, whereas the euro seems a bit messy, a bit chopped up, and probably better to wait for a clear break either way before really committing to that trade. Aussie dollar as well, pushing higher from this morning. You can see where we opened the week. We've already had a decent sized move of this dollar weakness. So in terms of maybe looking for continuations right now, probably better to wait for a bit of a retracement. Previous high of the day, 78.68, not a bad place for the Aussie dollar there, or maybe even the sort of the R1 sort of pullback point that we had as well. To be more favourable, I'd say you've got to be careful here. You know, you can see where we started the day, have already sort of pushed on quite a bit, so just bear in mind for now about where we could get to. With the pound pushing on, you've had FTSE just coming down over the last sort of hour or so. Pivot yesterday's or Friday's, I should say, sort of higher points could be an interesting area to be wary of, especially if the pound was to perhaps find a bit of resistance. Staying on equities, I posted in the chat earlier about the level that the Dow was at, and you can see here, if I just draw that line up, we've now had a pretty good break of that point. So this is the highest we've been since the 5th, which was that Monday, where it all sort of continue to kick on. So be interesting to see if we definitely can break above here, but where we can go through today. The S&P, that similar level, just a bit more to go, and Nasdaq, I'll just draw this up, you can see, look how close Nasdaq is really to those all-time highs. Let's just mark that up, let's get a little percentage to see if we could perhaps do that this week. 1.81%, I reckon we can do that this week for the Nasdaq. So let's wait and see. In terms of moves for equity markets, let's go back to the S&P. I mean, looking for perhaps the breakouts of these key resistance points from back on the 5th might be a way to go when the volume increases. You've got previous resistance of the day, which could now obviously act as support if we were to come back down there, 27.54 3/4. Safer option, obviously, anywhere near the areas of support that we have found or previous resistance areas, but that might seem a long way away. So cash open again will be quite interesting, but sentiment really is to the upside in the US for the stocks. Let's have a look over at DAX, which you can see has gone higher, gone lower, gapped higher, filled the gap as usual. Pretty much a mess on the Monday, and probably best left alone for now, unless we were to get a break either way. I think the pivot, to be honest, does actually look quite interesting with these points here. You see, let me just circle those up, which align pretty nicely with the pivot as mentioned, but again, that does seem quite far away. Oil, which, yeah, as I mentioned, just coming off those higher levels, almost touching 64 on the futures. Interesting support point from this morning, 63.43 to be aware of. But yeah, I think the sentiment for these markets, what we were having on the beginning of Feb was very much everything was coming down, or the dollar was strengthening as well. It seems that this is all starting to reverse. We saw oil, so we're having quite a decent up week last week. Stocks continuing to push on, and more of that this morning, and the dollar just weakening again now, down 0.26%. We'll be posting charts throughout the day, and any questions about this, obviously please do get it in. Gold is coming down to what was the previous high of the day, so an interesting support point. We've had 2 tests there already, so I think if we was to come down again to that exact point, we'd be less certain perhaps that it's going to hold out, but definitely one to keep an eye on there. But if I don't chat to you personally, hope you have a good day and good trading week ahead. I'll catch you in the chat.